Welcome to the A2 Show with Andrew Cass and Aaron Parkinson, bringing you the trends and topics that affect our lives the most: business, politics, fitness, family, and finance. With over 50 plus years of combined business experience and over $1 billion in revenue generated, your hosts have a unique gift for seeing many steps ahead where others do not. They bring their unfiltered, contrarian views to the show every week to help you win in business and in life.
Aaron, question for you. Are we on the brink of a financial collapse? Because at the time of this recording, people are going haywire when they see the stock market lose about 2,000 points in a matter of a couple days, and all of a sudden, the pundits come out with the interest rate cuts, and we need this, and we need that, and we need stimulus. It's really crazy, and we want to speak to you today from a standpoint of being a business owner during this, and also being an investor in somebody who wants to put capital to work or protect capital during this. So, what do you think?
My short answer?
Well, we've got plenty of time.
I don't know. My longer answer would be, I actually believe that we're in for a rough couple of months till the election is done. And then I think you're going to see a surge of optimism, and I think you're going to see everything level out. But between now and then, I think everybody needs to buckle up.
Yeah.
And we're going to talk about some of those things today. And then after that, that's just my belief system.
Yeah.
Sometimes you and I play opposite sides of the coin. I can be the eternal optimist. You can be a little bit more of the careful pessimist, and we kind of end up somewhere in the middle. But
I like to say pragmatism.
Pragmatist, yes.
Because I'm generally optimistic but cautious. And I think there's a saying, and I think it's a military saying, that says something along the lines of prepare for the worst but expect the best. And that's normally how I do things.
I like that.
I kind of come at things and I'm like, well, what could go wrong? I'm a little bit of an analyst with things. What could go wrong? Or why is, and thank God, I don't know where I got this from, Aaron, but thank God that I'm wired to be skeptical, and I think that that's a good thing. But sometimes it can get analyzed as a bad thing. Skepticism sometimes seems like negativity, but a lot of times it's caution.
Yeah, and I don't think there's any right or wrong stance. I just know my personality, and my personality is always, everything's going to be fine in the end. I'll work it out. It'll all work itself. Let's just go, and I think that's probably cost me in the past a few times.
Yeah, there's also a saying, what you don't know won't hurt you, which I think is probably one of the most damaging statements I've ever heard. Really, what you don't know will hurt you, in my view. So there's a lot of, contrarian thinking that I take on. I adopt a lot of contrarian thinking. I think it's in our show intro, right? We take a contrarian approach to things. So I think we will take that approach here today. But I agree with you. I think the next few months are going to be really, really tough. I'm a little more concerned about not only financial, but I'm most concerned about some sort of civil or social unrest, which we talk about quite a bit on the show, which will have a very dramatic negative impact on finance. So I'm concerned more about war right now because they're breaking out all over the world. And I'm concerned about the things that can come from war, such as maybe an EMP attack, maybe a grid attack. I'm very concerned about the grid in America. And the grid, by the way, ties to the stock market, right? So if we get hit with a grid attack, let's say, maybe it's an EMP pulse attack, nuclear maybe seems like a long shot, but there's a lot of people who are concerned about that right now because of the Russia thing, and we're sort of provoking and instigating that. But all of these things will really, really, really hurt the banking system and the stock market, and then consumer confidence, and ultimately what's happening with spending in your business, which is where we're going to go today. So sometimes it seems like it's just finance and politics on the surface, but it really stems back to the economy in your home, right? What you're doing with your retirement funds, your savings, your debt, your rates, right? So you start to lose options when we get into these little micro crises. So there's a couple little fronts right now. We have a financial front with inflation being high, and rates have been high for a long time. I think that's the point of today. This debt crisis is out of control. I'm going to bring up this screen here a little bit and show you where we're at from a debt standpoint. You did a presentation on the debt crisis to, I think, a real estate group, right? Mm-hmm. So there's that element as well. And then we'll talk a little bit about what are some of the things that we're doing to hedge ourselves. I'm a stock market economy, CNBC every day, what's going on with companies, what's going on with CEOs, what's going on with trends in different places. I trade a little bit, right? So I'm always looking at commodities and Bitcoin in the markets and whatnot. I guess how I'm wired since I used to be in that business back in the late 90s, early part of 2000. So I'm still plugged in, I guess you could say, right? So I'm running a business, right? But I'm also still very plugged into the markets, into the geopolitical things that are going on that can affect investments.
Well, and the reason that we were already planning on doing this show anyway, and then between last week where we were talking about the week of chaos while I was on vacation politically, which we talked about heavily in our last episode, between us deciding to do this episode today and now, we've had another bunch of chaos happen, but in a completely different space, right? In the finance space, where we're seeing the Asian markets take the biggest dip they've had since was it Black Friday or Black Monday? 2008.
2008 was right around the time of that financial crisis where it was the mortgage debt cycle, right? 2008-ish.
Yeah, it was. So
when a lot of the big investment banks went down, like Lehman Brothers. And
somebody smart is going to correct me in this show. The Asian markets dropped the single largest amount in one day. It might be the Black Monday. I think that was 1988, not 2008. Or it could be 2008. Whatever it was a precipitous drop.
You're talking about the one this week, right?
Yeah, the one this week. And then we've had the U.S. market doing something very similar. It had a huge drop, earlier in the week and tail end of last week, and then it kind of rallied a little bit, and then it had another big drop. So I can see your screen pulled up.
You see it right now, so the viewers don't see it, but I'll read it. Japanese stocks rebound from worst crash since 1987. And then we were talking before the show, Aaron, a lot of people don't know this. I didn't know this until I was watching one of the financial minds I follow on YouTube, is Japan just raised interest rates for the first time in something like 17 years, while everybody else is talking about lowering rates now. The first thing that happens in America is anytime there's a hiccup, they're like, oh my God, we need to lower rates. Stimulate. Mm-hmm. Everybody just wants to jump to stimulate, which I think is part of the problem, is that everybody thinks the government's going to save every little hiccup in the market or in the economy.